Hello traders, this video is recorded by George Beaulieu, the founder of StochasticMACD.com. The title of this video is Forex Day Trading Part 1. Alright, Forex Day Trading Part 1. In this video, we're going to look at the strategy that we can use for day trading when we are trading Forex, the currency pairs, the Euro USD, the dollar yen, the pound dollar, the New Zealand dollar US dollar currency pair, the pound yen, all these currency pair. Okay, I'm going to show traders how we can day trade the Forex market. Now, as I told traders before, because we have traders that are using our trading system, the TSTW24 trading system, specialty day trading, we have a strategy that we follow. We are looking for, we want to follow the trading drill, so we want to look for, okay, a setup, a signal, and then select a low risk entry point. Apart from the trading drill, this is the trading drill. Apart from the trading drill, we want to also pay attention to the trading triangle, the market first, the sector before, the individual financial instrument. This is more valid for stock and for commodity, but we do not forget the inside of the trading triangle, okay, the market leaders, okay, the economy news, and the fundamental. Talking about Forex economy news, I recommend to traders, okay, to bookmark, okay, Forex Factory, www.forexfactory.com. All right. We can also go to Google Finance and Yahoo Finance, okay, to check the economy news. All right. So I'm on the 4-hour chart looking at the leading currency pair. The number one currency pair is what? The Euro USD. If you are trading Forex, you must constantly check the Euro USD. Now today is Monday, the 13th of January 2014, and the time in London is 23 minutes past 3. In New York, 23 minutes past 10 a.m. Moment please, I'm going to check something very quickly on this chart. Okay, I want to check something before we continue. All right. One second, please, as I'm checking something here. Okay. All right. No problems. All right. What I want to say to traders, I'm going to go back again to the Euro USD because this is a Forex trading, Forex day trading. All right. I'm going to go now to the 4-hour chart. In this video, I'm going to use the 4-hour chart to detect a setup. All right. So when you're going to look at the chart, maybe you have your stochastic 833, your indicators on the chart, everything, and you are day trading. But what you need to pay attention to, or what you need to concentrate on, is what? The price self. All right. You remember the 3 things that we need to know: the trading triangle. The first thing is the trading drill, the trading triangle, and the price is the number one indicator. Now, so when we are looking at the charts, we want to day trade. We don't want to spend too much time, okay, looking at the indicator. We can spend 70%, 75% of our time looking at the chart, the price, and we will spend 25% of the time looking at the indicator. All right. So on this 4-hour chart, okay, the price does not hide anything. There was a resistance here. So the price was going up, and on this 4-hour chart, the price went down. Okay? So it's a resistance level. So what I'm going to do now, I'm going to draw a resistance level there. So some people sold it here. All right? Some market participants, for one reason or another, all right, decided to sell it at that level. So they sold it here. So as the price went down, the price recovered suddenly along this pink line, which I'm going to tell you more about later on. And the price went up again. And when it reached the same level where they sold it before, they sold it again. But this time it didn't go down very much. And the price recovered quickly. And then went up again. and the same resistance level, they sold it again. So what we are seeing now on this 4-hour chart is that we have a triple top. A triple top is a confirmation of a bullish momentum, but the bullish momentum will be confirmed when we see what? A lower high and a lower low. So from this triple top, there was a low here. Very important for us to see a lower low. So there was a lower low. Now we have here a kind of a lower high being formed here. This is the definition of a downtrend. So some traders recognize what is taking place on the edge of these key levels that we have drawn on the yearly chart, 13674. You see all the line here, the line that I have here, these are key level 13674. So from that level, some traders are selling it. They have a good reason to sell it. So this is my setup now. So I see a setup, and it's a bearish setup. I also drawn on my chart. All right, you see here the pink trend line, this low. If let's go to the daily chart and see. This is on the daily chart. You can see that there was this low here. I join in with this low here. You see this point, and this point allowed me to draw my pink trend line. But as we are watching a trend line, it's a bullish trend line, we must also pay attention to the static key level, which are resistance level. Here, this is a resistance level, which I've drawn from the yearly chart. So, for my setup that I see on the 4-hour chart, there is a high channel. If the price going down, the level we need to watch is the pink trend line. So, as they are selling it, professional are watching this pink trend line on a daily chart, because we are talking about day trading. We must pay attention to the daily chart, okay? So I see a setup now, okay? All right. I'm going to go now to the, I will show you on the yearly chart. I have drawn some lines here, okay? The short-term equilibrium price level. But I don't want to dwell on this. These are key level, all the lines. You see the turquoise line, all these lines. I've drawn them from the yearly chart. Now I'm going to go now to the, so on the 4-hour chart we see a triple top. Alright, this is the 4-hour chart. We see a triple top. Alright, a triple top, 1, 2, 3, and we are seeing a lower high being formed after, this is very important, after a lower low. We want to see a lower low followed by a lower high. Alright, so we see that now. So some traders are selling it. So if you have noticed this, you look for opportunity to sell. I'm going to go directly to the 3-minute chart, and I've drawn some lines. So what I'm going to do to avoid that, I will remove this spotlight that I've put on the chart, on the 4-hour chart. On the 3-minute chart last Friday, I draw some line here. You can't see the rest of it. Then I will change my time frame to the 5-minute chart so you can see everything that I've drawn. So now, because last Friday I was able to draw this line on the 3-minute chart, this point, and this point allowed me to draw this trend line which I posted on Facebook page. It's a resistance level, and as the price ran fast, the professional watching this level, and the price has stopped there, and since then it just went horizontal. Now it's dropping down here. Also, the turquoise horizontal line is a resistance level on the yearly chart, so it's a nice place to look for opportunity to sell. So you can see that today it went up above it a little bit during the Asia session, but as London did open quickly, okay, it just holding it down. All right. So on the 3-minute chart, okay, I'm going to start drawing some channel here, roughly. Okay, so there's a bearish trend line like this on the 3-minute chart. I'm going to color it now into orange. Okay, that's line here. Okay, and the price also, I draw another line here on the 3-minute chart is still displaying, okay, a high, a lower high compared to this one, a lower low right here, a lower low compared to this one, a lower high, and then a lower low, and then a lower high again, and it's telling me that okay, this thing is likely, okay, to continue, okay, the move to the downside. So I'm going to draw a line here to make it parallel to the first line here. So I'm going to direct the price. If you allow me, I can change my time frame now. I'll go instead to the 10-minute chart because I want to see everything clearly. So I'm going to put it like this, and I'll say to myself, there's a high chance that if it's going to go down, it was going down like a crab, okay, going like this up to we reach this level here. All right. So just paying attention to the price, I was able to make these decisions. All right, not in the void because there's a resistance here. All right, you want to sell around resistance level. You want to buy around support level. So this resistance here, okay, is allowing me, okay, giving me a bit of confidence. So if I sell here, okay, after this lower high, I can place my stop loss above that resistance level, not risking too much pips. All right, carefully, 20 pips will be enough, and I can control it nicely. All right. Okay, another thing we need to know, because as I say to traders, all right, we want to be a multi-talented day traders. So we are applying one strategy. We don't want to forget everything else that we know about day trading, about trading in general. All right. We also know that this was the non-farm data that pushed the price up. How the economy new has changed the dynamics of the market price. The euro recovered from the bearish pressure that it was under before the non-farm data, because the non-farm data was bearish for the dollar. So the euro has benefited from that. So it went up. When we see this is a distortion, when we see a vertical move, this is a vertical move. All right, the price went in vertical. Normally the price should go in diagonal. Whenever we see a vertical move or a distortion, a vertical move, okay, to a certain degree is a distortion. We can see a vertical move during the third Elliott wave very often, where the momentum is very strong. This is economy new have prepared the price in a vertical channel. This is not a market pattern, it's a distortion. We have only three market patterns: the horizontal channel, okay, the declining channel, and the rising channel, which is in a diagonal, okay, direction, all right, not a vertical. This is not a normal market progression. So what have we said before? We said that when we see a distorted candle, we highlight the low, all right, highlight the low, all right, we highlight the high, and we highlight what? The median line, all right? Do not forget that, okay? So you know it, do not forget, okay? So the median line is somewhere in this region. All right, so you see the black lines. The first one here, that's the high of the distortion. The one here, that's the low of the distortion. And the median line is right here, which is corresponding to this resistance level on our left-hand side. All right, so as the price going down, we need to be careful again, though we want it slowly, gradually to come. The best support level is the pink line here, which we have drawn on the daily chart. We shouldn't forget this level here at 136.28. So where we are now is a bit tricky to sell, because the price now on the lower part of the declining channel. The best place to look for opportunity to sell will be on the upper end of the channel, okay? When the price display a lower high, we'll take it at a low risk entry point, all right? But if you do not know that there was a distortion here, that there was a median line, at least you know that there's a resistance here. You can draw this line, which is a support level. As you're rolling it down, we must watch this level at 136, okay, 136.28. It's a level that day trader must watch. So, okay, you see now? So you need to be where you want to buy. If you want to sell, okay, on the edge of this channel here, and let it roll it down. If they take you out with a tiny pip, that's not too bad, all right? So, but if you don't know where are the support level because you want to sell at a resistance zone. But the next thing you want to know, because the price always going from A to B, where is the next support level? Because the price is going down, the price looking for the next support level. So that's one here at 136.28. So professionals that are selling the euro now know this level. So as the price out, you can see some conservative day trader took profit here, all right, because they know there's a resistance. If we put a London line here, watch this one here, watch this one, okay, this point, and the top of this one. If we withdraw it carefully here, look, all right, you see this blue one that I draw down. That's where some traders, some bear took some profit, day trader took some profit here, all right. So you want to know where is the next, okay, resistance level. All right, you see now? So from the 4-hour chart, we drop it down, applying, okay, everything that we know about day trading, okay, to analyze, okay, the price. So far, I did not put any indicator on this chart. I can put MACD, I can put the RSI, I can put the CCI, but as I told you before, we want to concentrate on the price. All right. This weekend, I received some email from TSTW24 traders asking questions about how economy news can affect, okay, the market. One thing I need to mention here to traders is that it does not matter whether we are trading stocks, commodity, okay, ETF, indices, or Forex, okay. The economy news will affect the financial instrument that we are trading because, first, the center of the market is what? The human being, the market participants. So there are market participants in Asia, in Africa, in Europe, in America, in Australia, everywhere in the world. And these human beings, okay, are making decisions. They are buying, they are selling, and that's why the price is going up and down. Now, when a major economy is due, all right, these human beings, all right, will make decisions. Suppose, okay, you are trading, for instance, crude oil, and your trade is profitable, all right? Now, maybe you are trading also Forex, or maybe you are trading only crude oil, and your trade is profitable. And you know that there are some major news concerning Forex, like the North Farm data, but maybe you are in Asia, all right? As a smart trader, you will try to protect your profit, or secure your profit, or even take your profit because you know that a major economy news due to be released somewhere in the world, and you will have some impact. Human being will react to the economy news, which means some trader will adjust their portfolio. Just because this economy news due, some traders will close some trade that are profitable. Some traders will reduce their exposure, which means if they have 10 trade or 20 trade open, they may close some of them because they don't want to have many trades open. So as different traders using different strategy to control the risk, because the bottom line is to make money. How do we make money? When we are reducing the risk, when we are controlling the risk, we will make money. All right, this is it, because the market is always risky. So you sell here, there's a risk that the price may go up and you are taken out. So you may use a stop loss, you may use different financial instruments, you may apply the 5% money management rule, always. So the bottom line is to make money. If you are not making money, all right, well, you need to control the risk desperately. You want to control the risk, you don't want to keep giving money away. Okay, this is not good. It's not good. Money is very important, all right? You need money all the time. So take it, don't give it to anyhow, control it. So a lot of traders are controlling the risk because economy news are due somewhere. Though the financial instrument that they are trading, the economy is not directly connected to that financial instrument. But professionals will make decisions because they know that. Suppose in Japan, okay, the Bank of Japan is going to speak. We are in London or you are in America. Professionals know that, they will pay attention. Or in China, sometime in the middle of the night, in China or in Australia, when London in the middle of the night, 2 a.m. in London or 1 a.m. in London, these economy news are released in Japan, in Australia, or all right, or in China. Even sometime on Saturday in China, some news are released. And so professionals are trying to protect their portfolio. This is the key. Okay, so you are working for Goldman Sachs, JP Morgan, you are working for hedge funds, your number one priority is protect. So if, for instance, okay, your supervisor looking on your trading portfolio and say, why don't you apply, okay, why don't you protect your trade? You may say, I don't think that this will affect, this has nothing to do with, okay, the financial instrument that I'm trading. But the market is global, all right, the market is global. One of the problems that some of the traders that are trading stock are facing, because they think that, okay, I know that the economy news, okay, is too volatile for Forex trading. Forex, you can't get away with it. It's less volatile, all right, for stock trading. That's true. All right, the way we see the ups and downs in the Forex market is not the same thing that we see in the stock market. But all economy news that are concerning the Forex have some impact directly or indirectly, okay, on the stock market, on the commodity market, on the ETF market, on the indices, all right? So it would be nice, okay, to have a financial instrument that is not affected by economy news, but we can't get away with it because of what? The trading triangle. The economy news, the fundamentals, all right, and the market leaders will always affect the financial instrument that we are trading. Some traders end up wiping out their trading account because these traders can trade. They can trade, all right? So that's why I always recommend to traders to pay attention to the economy news, Forex Factory for Forex traders, okay? Google Finance, Yahoo Finance, stock traders, okay? Commodity traders, to check the balance sheet, to check the cash flow, to check the competition, to check the economy news. It's being more, okay, in charge of your trading. It's about being more mature as a trader. But when a trader starts paying attention to the economy news, that's a very good news. I like traders that are paying attention to the economy news, all right? Because if a new trader at early stage starts paying attention to economy news, this trader is already, okay, improving. Very important. So I always like traders. If trader asks me a question about economy news, I like these type of traders. I pay attention to those traders, okay? So it's very good that traders are paying attention to the economy news. So what I'm doing here, all right, what I'm doing here, this is a technical analysis. I'll just go to the 4-hour chart and then analyze the price. Why? Because why do we need to look at the price? All decisions that are made, either fundamentally speaking or technically speaking, is reflected by the price. So fundamental traders are checking the economy news, they are selling. Technical traders are looking at the chart, they are selling or buying, all right? But the consensus, all the buy and sell is reflected by the price. That's why we say that the price is number one indicator. That's why some traders trade only the price. But we do not trade economy news. This is important. We don't trade economy news. But some traders do trade economy news. These are speculators. If that's your trading style, that's fine. But I'm talking personally on my view. I do not trade economy news. All I do, I want to know when they are due and what sort of impact they may have on the market in general. I want to know when the economy news. I don't want to know which economy news is being released, because in the past I have lost a lot of money when I'm sitting in front of the computer and I see sometimes a tall candle that will take me out of my trade, and then I will quickly switch on Bloomberg and listen, and they will say that, okay, this important news just being released, and I want to know, all right? If you are trading the dollar yen, you want to pay attention to the Japanese economy, you are involved. Forex, you are international. If you are a Forex day trader, okay, you must pay attention to the economy news, all right? But what I've done now, as a technical trader, we must always follow the trading drill. We must find first a setup. So as I show you now, I see a triple top. This is my setup today. And I just follow it carefully. I will also use the definition of a downtrend. A lower low. When I apply this trade, lower low, followed by a lower high, it's bearish. Now I see it on the 4-hour chart. Now I drop it down to the lower time frame because the market is fractal. I don't want to enter the trade on the 4-hour chart. We want to zoom into it. But at the time when we are about to enter a day trade, we want to see what is happening right now. Because as a day trader, we're not going to expose ourselves to higher risk. All right? So you want to control. So you want to know what is happening now. All right? Because you're about to enter a day trade, you are concerned about what is happening now. You are not a long-term trader. You want to time your entry carefully. You want to minimize your risk. You don't have the whole day. You have maybe a few hours to get paid and get out. Okay, so that's why we use a multiple time frame trading method. If you are a TSTW24 trader, look for a setup either on the third best time frame or the second best time frame. You can go to the daily chart, you can go to the weekly chart to find a setup. It can be a resistance level, and then you drop it down because professional, as I demonstrated last time on our YouTube channel, Day Pro Traders channel. Okay, we have 3 YouTube channels, George Rio channel, all right, 248 Your Way channel, and day pro trader channel. So as I was telling today about how to day trade like a pro, you can go to day pro traders channel to watch the first, the second, and the third video. I was showing traders how professional are trading. Professional are not trading against the trend, all right? And they use key levels, all right? So the same thing we are doing here, all right? But there was a distortion, and as I showed traders before how we trade economy news, we wait for the economy news to be released first, and then if there is a distortion, we highlight the high, the low, and the median line. Very often, if there is a true distortion, or if it's a valid distortion, the price has a high chance to cancel it. That's what we call a correction. It will pull back completely to the beginning of the distortion. But as the price is trying to come back down, there are key levels that we watch. The median line, okay, of the distorted candle, which is this one here. You will see. We will see how this will play today. As you see, traders, these are smart, beautiful. Okay, still forcing it down because professional, they sell at one point. They bring the price to the next level. That's how they move. So from one resistance level to the next resistance level, from this support level to the next support level. All right, that's how we go. So when we sell at a resistance level, the next question is that where is the nearest support level? All right. Now, for traders that are new, you may think that George, is a bit complicated. It's not complicated. If you practice will make you better. All right, you can practice. I play some games on my Galaxy Note. At the beginning, the game may be complicated, and then you keep playing the game, keep playing it, and then suddenly, okay, you understand what is taking place. Or if you play some EA games about racing, first you do not know the roads, all right, the course of the race. As you are racing more and more, you understanding the race course, and you know you can anticipate what the next corner or the next roundabout, okay, or the next obstacle, so your race start improving. The same thing I say to traders. There's no quick fix for trading. Practice is the key, all right? So I think I've said enough now, but okay. So try to encourage traders here, so they may, okay, do it. As you see now, so very simple. Day trading is very simple. Setup, signal, entry point, all right? Paying attention to the price itself, the number one indicator. What I'm going to do now, this is the Euro USD. Now, another thing I need to say to you, on Mondays, very often on Mondays, a lot of retail traders will lose a lot of money, and that's it. The week has ended for them on Monday. Why? On Monday, the market resets itself. I said it before, and I'm saying it for traders who did not watch our videos before. The first day of the week is Monday, and the last day of the week is Friday. These Monday and Friday, if you are trading, you need to be careful because professionals will adjust their portfolio. Decisions are made ahead of the week, which economy news are due this week. Professionals will start paying attention to those news, even news that are due on Friday, those high impact news, they are paying attention to them, and they will trade accordingly. On Monday also, sometimes some currency may gap up or gap down. People will take profits. Or beginning of the week, because a major economy news due on Wednesday or Thursday, if some swing traders were already in profit, they may decide to take profit or cut losses. Those kind of activity take place on Monday. So sometimes it can be difficult to trade on Monday because the market is not revealing its true nature correctly on Monday because of the adjustment. People are adjusting. They are not trading, but they are just adjusting their portfolio. So usually traders end up seeing some wrong patterns that get them into trouble. Same thing we see on Friday afternoons. If you are day trading Friday afternoon, all right, you may see some funny setups, all right, that are not valid because of the adjustment. These are not trades that professional trading. These are adjustments. These adjustments are not trades. So for instance, if I decided to close 5 of my trade because I don't want to leave too many trade open because the next day this economic news may affect my portfolio. This is not a trade. It's just a precaution. It's risk management. This kind of activity about risk management, these are adjustments, but do not reflect, okay, trading activity. So those, okay, adjustment can create some false setup, and if you are trading, then you can be in trouble. So my recommendation for traders is that on Monday, I mean, if you are trading only the Asia session, do me a favor, please, all right? Especially if you are trading Forex, all right? Do not place any trade until Hong Kong is open. So Tokyo will open first at midnight London time, and 2 a.m. Hong Kong will open. Do not place any trade until Hong Kong is open at 2 a.m. London time. That will save you all sorts of trouble, because Tokyo is open, the adjustment started, blah, 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 blah. And if you chase those kind of pips, you end up giving away a lot of money. But if you want to do it, be very, very careful. If Tokyo is open and 20 minutes later you enter the trade, don't rush into it. If you are trading that session, stay there maybe an hour, okay, an hour and a half, and then just go to bed, all right? Go to bed and wait for London to open. When the future market is open at 7 a.m. London time, that's 5 a.m. Eastern time, relax. Wait until London is open. That's why I say to TSCW24 traders, wait until London is open, all right? Wait until London is open. If I show you today, all right, because this I will show you now, 3 a.m. Eastern time. That's it. London is open right here. See here? Right here. Right here. That's why London did open. From that point onward, you see all these things happen, okay, in the night, blah, 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 blah. As London opened, it just went up to retest that level. And then since then, it's just running it down so far, you see? This is where London did open. So if you sold it that time, you may take a profit here, and then you have another chance, and you sell again, okay? That's it. That's where London did open, all right? So Monday and Friday, be careful. There's another economy news that is due on Wednesdays, all right? Wednesdays. This is very often on Wednesday, the crude oil inventory. And on Thursday, we have natural gas, okay, economy news. And these two news on Wednesday and Thursday, professional watching it. So some day traders do not trade on Mondays because they are fed up of Monday, all right? So they wait until Tuesday and they start getting into the markets. But if you want to trade on Monday, my recommendation, London is open, wait until London is open and then place a trade. Stay in the markets for 2 hours and then come out. Just come out. Just come out completely. Come out. And then either if you don't have anything to do, they play computer games or do something else. Wait until New York is open on Monday. When New York is open, do not place a trade yet. Wait 30 minutes. So New York will open at 9:30. You wait until what? 10 a.m. I'm going to show you where is the 10 a.m. Eastern time. This is it. This one here. That's it. That's correct here. Here it is. That's 10 a.m. Eastern time. Right? Because as London is open, they are waiting for New York. And also during the gap period, which is between 10 a.m. until New York is open, from London 10 a.m., that's 5 a.m. Eastern time, up to the time New York is open, that's the gap period, yes or no? So professional waiting for New York to open. So when London is open, first 2 hours, if you're trading for it, get your quick pips, take it, go. Wait until, okay. So some economy news will be released between 10 a.m. London time until the time New York is open. You want to avoid them. You don't want them to mess you up. All right? You don't want them to mess you up. And then New York is open. Now we go back to the trading triangle. So New York is open. All right. We want to see. Okay, this is the S&P 500. Where is it going? Very often, I prefer to use if I'm trading Forex. I keep my eyes more on the on the Dow Jones. This is it, the Dow Jones, the Dow 30 index. I keep eyes on it because very often, as soon as New York is open, if Dow Jones is very, very bullish, you will see that the Euro USD very often, more than 70% of the time, will follow the Dow Jones index. If the Dow Jones is bearish, very often the Euro will follow it. Sometimes, it may not, but 70% of the time you will see that. So you need to keep eyes on the markets instead of using the S&P 500. If I'm trading Forex, I use the Dow 30, and I'm watching it. Okay, now you see Dow Jones is holding it down on the 3-minute chart. So you see that's today. Okay, this is today. All right, this is so it went down first and then went up, and then now it's going down. Okay, all right. It makes sense. All right, it is also powerful. So these are the steps, that we can follow rigorously every day, all right, and then to day trade correctly, okay. So this is about Forex a day trading, a part 1, and we were looking at what the Euro USD, trading on the edge, and knowing the key levels. I hope you are learning something from this video also, we'll put into use to make excellent day trading decisions. As always, if you are TSTW24 or TSTWSY0A trader, if you have any question, do not hesitate to ask question, all right? Don't think that, I asked question yesterday, I asked again. Do not hesitate. Sometimes I may not reply to you straight away. But you ask the question, I will get back to you. 1 day, 2 days later, it's better than not to ask, Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders. Speak to you soon.